Karnataka has established itself as a leading hub for electronic system design and manufacturing in India, contributing 10% to the nation's electronics output. We are also home to 400 plus MNCs with global R&D centers. With over 100 fabulous chip design houses and 40% national share in electronic design, Karnataka stands as a prominent hub for chip innovation in India. Invest Karnataka 2025 will bring more global players to benefit from the state's strong and tech-enabled ecosystem.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Last half an hour remaining. It's turned out to be a rather weak day and a weak start for this entire week. When we look at the Nifty, it's 170 points lower in trade. We are off the low point of the day, but still down and below 23,350, 23,400 odd mark at this point in time. When we look at the sectors, all the sectors are actually still down in trade, with metals and realty facing a larger brunt, with the real estate stocks now having slipped to the low point, 2.8% lower in trade for the real estate stocks. That's the beaten down sector today. Metals are down also by 2.4 odd percent. You have consumer durables that's down by 2.3%. At least 5 sectors are down by over 2% in trade today. Broader markets also weak, both mid and the small caps down by 2% each. You also have the private banks, the FMCG stocks, IT, auto, all of these counters also down by about 1.5% each. So you actually see it's a broad-based sell-off in the markets today, with rarely any solace being seen. On the India VIX, there is some green, 5.4% uptake, 14.4 odd levels right now. As far as the India VIX levels are concerned, of course, some broader market names are looking interesting, with single high-digit returns coming in on some, but the market is absolutely very stock selective at this point in time. Let's welcome our guest on board. We have Mr. Kunal Rambia, founder of The Streets, joining in to explain to us what's really going on in the markets. Kunal, warm welcome. Good afternoon to you. Well, we've started off another week on a rather somber note. This is right after two of the major events. The near-term risks that we were, or the markets were perceiving, are already out, and in fact these two have hardly turned out to be any risks, because the union budget was largely cheered by the market analysts and economists alike. What we are looking at, even the RBI, that's also delivered as per expectations, a 25 basis points cut. All of this was being hoped as key triggers that could probably get the sentiments back on the D Street. That seems to be still missing. What do you think is the key factor why the markets are not willing to get out of this narrowing trading band?
Good afternoon, Sakshi. Good afternoon to all our viewers. As you rightly mentioned, we saw both the events turning out positive. Actually, in fact, the budget delivered, more than what people were actually anticipating. In fact, but at the same time, if you look at the market, the Nifty was somewhere near to 22,700, and it reclaimed 23,800 mark right before the budget itself. And as we rightly always discuss, that market discounts everything. So market was already anticipating some kind of positive announcements, and that's what seems likely. And these events are now turning out to be kind of profit booking for the short-term opportunities. But as we have been discussing on our shows regularly, that the overall trend on the market still remains positive. This market, I would still consider as, buy on dip kind of market on index front. And as you rightly mentioned in the beginning, opening remark itself, that, the stock specific moves are likely to continue. Yes, now we need to be extremely careful on selecting the counters, because not every counter is so far participating even in the reversal.
Fair point. Now, Kunal, tell us, in this weak setup in the market, are you getting the confidence to really look at some sectors or stocks as safe havens, or is it a wait and watch kind of a scenario where you would probably just look at the situation probably turn better for you to again look at and spot opportunities in the markets?
See, I'm very comfortable buying, the selected names like Reliance Industries or say Bajaj Finserv. These counters are doing really good. In fact, look at Reliance Industries. It's in sideways consolidation since November. In recent times, it started making higher top, higher bottom, rightly declined from the resistance itself, right now available at 1250. I think with stop of 1235, one can think of initiating buy on that. Bajaj Finserv on the other side is also looking very attractive, sideways consolidating since a week. Overall trend is positive. So with the stop of 1770, one can initiate a buy even on Bajaj Finserv. The targets can be 1900 kind of levels. So yes, these are selected pockets where I'm very comfortable and I'm initiating buys. But otherwise, as you again rightly mentioned, sideways consolidation. So we need to be careful and wait and watch scenario is likely.
Wait and watch scenario is likely. Let's look at the large private sector banks. Some of them are showing us strength. Kotak Mahindra Bank, ICICI Bank is pulling up in trade. Within the NBFC space, you have Shriram Finance. You did take the name of Bajaj Finance as well. Do you still believe that consensus buying in financials will continue? Does this space offer you that kind of an opportunity?
Yes, and the first counter which you mentioned is the best pick for us right now, and that's Kotak Mahindra Bank. December 2020 counter claimed 2020 mark. Okay, that was the level where it made a high, and since then this counter is just struggling to surpass 2020 since 2020. Right now, today's trade, it's trading near to the high of the day, and it's on the verge of giving that breakout. As I mentioned, 2000 or 2020 is a level to watch out for. If Kotak Mahindra breaks that level on the upside, I think 10% upside is very likely on this counter due to 4.5 years of sideways consolidation. Sorry, 3.5 to 4 years of sideways consolidation. So it's looking very attractive. ICICI, on the other hand, is equally strong, making clear higher top, higher bottom formation. So with the stop of today's low, that's 1250, one can buy, and the targets can be 1285 to 1290 by weekend itself.
Absolutely. Let's look at some of the other pockets. Consumption as a theme that garnered it some pace right after the budget. FMCG counters, especially, some of them are again buzzing in trade today in an overall weak setup. You have large counters like Britannia or Tata Consumer Products, showing us some kind of a strength. Are you confident of this theme now probably finding it a structural move on the higher side?
See, fundamentally, yes, absolutely. This is good boost available to the entire sector. But again, broadly speaking, these all counters are in sideways consolidation. If someone is willing to initiate the bias for long term, I think Britannia, HUL, Dabur, they are well poised from the risk reward point of view. Extremely favorable risk reward ratio. Let's take an example of Britannia right now trading at 49.10. I think with the stop of 4700, one can buy with the target of as high as 5800 to 5900. Look at Hindustan Unilever. Sideways consolidating post budget, we saw a big uptick back to 2360. 2350 is the strong support. So, considering stop loss of 2300, one can go long. Targets can be 2700, but it's going to be patience testing game. So, someone who is willing to hold positions for long, I think this entire sector is offering good opportunity.
Okay, so the FMCG definitely offering some good amount of opportunity for investors. How about extending this to a little bit of consumer discretionary space? Today, some paint stocks are actually buzzing. You have Berger Paints that buzzing in the F&O space today. Asian Paints is somehow turning green, even though it posted disappointing set of numbers, and this has been a rather disappointing counter for this entire last 2024 as a whole year, and again the earnings are still not promising. But what about this entire paint space or consumer discretionary space? What exactly are you finding good in this space as well? Maybe retail, you could add other spaces as well. What are you looking good? What is looking good?
Right. So the first counter is the Berger paint itself. Again, I always give a lot of importance to historical data. So Berger paint from 2020 so far has not broken 450 mark, and it always held on to that level on the weekly closing basis. In fact, it retested that zone 5 times and it bounced from that level. The recent correction was still 435, but again back to 480. I think this is again that one of the counters which one can think of initiating a buy, but it's on the lower time frame also. It's in sideways consolidation. So the breakout for this counter is at around 495. Above 495 with the stop of 465, one can go long on Berger Paint, and the targets can be 550 to 565. So for the series of Feb and March, if someone wants to play, then I think one can create the bull call spread strategy also on the Berger Paint or initiating long on futures And short straddle can be a good strategy on this. Asian Paint on the other side, disappointing numbers were seen, but at the same time, counter already tumbled below the support level long back. And now it's consolidating. So with the stop of 2200, one can think of initiating a buy on that also, and the targets can be 2500. But out of two, I'll first prefer Berger over Asian as of now.
Okay, fair point. Let's look at some of the other factors as well. We've discussed the banking names, we've discussed FMCG and consumer discretionary. Now let's also look at the auto part. Why are we discussing all of this spaces? Because this is right after RBI's policy came in on Friday, and we are going to be continuing to see the impact of interest rate cuts on all these three rate sensitive sectors as well. So banks and FMCG out. Let's talk about autos as well. 1.5% lower for the auto space as of now, still in the slow moving area. But where do you find confidence? I mean, M&M came out with the earnings. Are you confident over there? Are you looking at opportunities for those which have been now long performing, underperforming spaces like Tata Motors, for instance? How are you navigating through the opportunities here, sir?
Such kind of markets, I generally avoid those counters which are near the all-time high. So for me, Maruti and Mahindra is completely ruled out because they are trading near to the high itself. But at the same time, as you rightly mentioned, Tata Motors, that's available right near to the low. The extreme sell-off is seen. On the technical parameters, we can see all the indicators showing oversold condition of the counter. Though as of now, the weakness persists, but at the same time, if the counter reverses from this level, it can offer those, that comfort on the risk reward. So right now it's trading at 696. I'm waiting for the price to give a trigger above 725. I think after that, one can initiate a buy with the stop of 680. Buy on dip can be good strategy on Tata Motors. For Maruti and M&M, I'll have to just wait for, the breakout to come in. Maruti has a breakout of around 13,400 to 450. Above that, one can think of initiating buy for momentum. But for now, out of this entire space, Tata Motors, though it's not showing bullishness, but it's giving me more comfort on the long side.
Fair point. Okay, so that's as far as the auto space is concerned. Before getting down to understanding some more sectoral moves and the approach right there, of course, domestically we've discussed the two events that have gone by, but a larger overhang still seems to be coming from overseas, especially the US. President Donald Trump and his statements every day create shockwaves across the world, and the ripple effects are also seen in India. Even today, the markets are nervous because there is again fear about Trump tariff talks, and that has also further led to an impact on key sectors which are linked globally. Even the currency market as well. The rupee is again at record low. Gold prices are at record highs as well. So you're already seeing an impact of that tariff talk. There is this fear of steel, aluminium imports attracting higher tariffs on top of which are existing tariffs as well. Then there is retaliation happening between the countries that Trump had already initiated tariff talks with. So, there is this nervousness about this entire regime change. Kunal, how are you looking at this key risk factor for the Indian markets, and any impact of that on the rupee that you see is rather going to be a big concern or not?
So, to be very honest, what you mentioned, all these points are the talk of the town these days, and everyone is fearful about how the things will shape up for the emerging markets, specifically for India. But at the same time, what we were just discussing in our office today morning is that unless this US visit is ending, we should not really be much worried about that. Second thing is, Indian markets have already decoupled from the rest of the world in terms of performance. We already saw a sharp correction coming in. Though, we also heard Ashwat Damodaran speaking about the valuation being too high over the weekend. But at the same time, the correction was also very sharp. And the stocks most of the counters have come down by 30 to 40%. Also, selected pockets are looking very good. So I personally feel that rather than looking at focusing on such chaotic updates where we are just going to be on the assumption front, let's look at the counters which are offering good risk reward. I think in such corrections itself, we always get favorable risk reward ratio. Otherwise, we end up buying the stocks at the highest level. So I don't foresee any trend reversal on the Dow front. Metal counters near to the support itself. Selectively, I'm bullish. I'm turning bullish on the sector. And as far as the specific names are concerned, which we discussed, I'm actually keeping an eye on the buying opportunity right now.
And how do you see the rupee going forward? Is that going to be a key risk factor even now?
So unless as I say that I'm always a trend follower, I don't foresee any negative charts formation right now, except for the fact that today it is showing me the shooting star. Now, shooting star is a candle formation in the technicals, where the market actually gap up opens, continues the uptick, and then closes near the low. As of now, rupee is at the day's low in terms of absolute number, and that is showing me some kind of reversal possibility. So the
Okay.
levels to watch out on the rupee are gonna be 86.65. If a rupee goes below that level, then I think on the currency weakness is almost done, and then we can expect the levels of 86 to come very, very soon.
Okay, fair point. So that's the expectation on the rupee is concerned. Let's also look at some more vulnerable pockets. You know, in this last 4.5 months of our consolidation canal, what we've seen is that every time we see a deep correction, it's the broader markets that face a deeper cut. The mid and the small caps, they are being seen as the whipping boys of the market, and those are the pockets that actually lose even further ground. Both these pockets are at the risk of entering bear market if such scenarios continue to be on a downward corrective mode. How are you looking at the mid and the small caps? Because retail investors have big exposures here, and that's why they are seeing large portfolios bleed at this point in time. So, what is the way out right now? Should one continue to wait, watch out for how things pan out in the near term? Should one absolutely exit, switch to large caps? What exactly is your thought process?
See now, if at all any investor who is stuck in the counters, like I'm not just naming for the sake of it right now, but otherwise, if you're looking at any specific counter exit, then the risk management will go as per the counter which we are holding. But as far as the index is concerned, that is small cap 100 index, that's Nifty small cap 100. It's down by around 15.5% from the high levels. I think we saw the levels of around 19,600, 700. And from there, right now, we are trading at, I think, around 16,600. But such kind of corrections we saw even in the beginning of 2024. And if you go back, check out September 23, I think similar kind of sideways consolidation and the sharp corrections were seen. This time, the exposure and the pain is much more because, I mean, I'm really sorry to say this, but then people have taken extra leverage positions and now they're holding on to the same in anticipation of the trend continuation. So if you look at the broader trend, in last 4 years, the trend has not really turned negative. Recently, there was too much of deviation from the mean level, and that's why this correction is looking sharper because of extra levered position. But otherwise, at this point in time, as I said earlier, also, I'm still absolutely comfortable initiating fresh entry. One has to take care of the risk management part. So for me, risk reward ratio is now extremely favorable. I go bullish on the market from this level.
Okay, fair point. So, Kunal's bullish on the markets from this level onwards. What we'll do, viewers, is we'll take a very quick break, return, and do some other stock spotting with Kunal right on the other side of this short break. Stay tuned with us.
Invest Karnataka 2025 is our chance to showcase Karnataka's best to the world. The business community, startups, academia, and even youngsters, I invite everyone to be part of this mega platform. From February 11th to 14th, let the world witness why Karnataka is the best destination to invest.
Warm welcome back to all our viewers who are watching Business Today Television. This is Market Today. Just about 12 minutes to go before the market shuts shop for the day. We've started this week on a somber note, but things look like in a way that we could be bottoming out, and that's what Kunal believes, and therefore he's bullish on the markets. He's with us to spot the market trends as well as strategies for key of our viewers. Kunal, do tell us then, apart from the sectors that we have discussed, where else do you find confidence in selecting some stocks, and how are you picking those stocks at this point in time?
So, if we look at the index and we are looking at the entry opportunities, let's spot a couple of entry opportunities in the stocks which are part of index itself. That's
Sure.
SBI. Now it's SBI, we have the counter is trading near 735. The same level is seen for the entire month of January, and in fact now beginning February also. Let's keep the stop loss of 725, which we have not seen as a low in the last 1.5 month time. That can be good stop, and one can go long. If the counter picks up from this level, the upside targets can be 765 to 770. Similar is the case with Axis Bank. Now look at the trend, extremely negative. We saw sharp uptick from 935 to as high as 1030. Now it's consolidating near that 1030 level itself. Stop loss of 975, one can go long on Axis Bank also. If the counter manages to break 1030, then the targets of 1085 to 1090 are also likely. And the third is IndusInd Bank, sideways consolidating counter off lately. As you know, we were discussing about this counter even in the month of January. This counter really picked up well. Now consolidating near the highs. Stop of 1025, one can go long. 1140 can be the target. So these are the three picks from the banking space itself, which are looking very attractive and offering good risk reward.
Okay, got that. So I hope all our viewers have noted down these key stock names where opportunities can be had at this point in time. Kunal, I'll bring you with some other stocks also that are buzzing in the broader markets, and then you tell us whether those are the stocks that you also find good at this point in time, or it's rather better to stay away from all of those as well. There are some which are absolutely, very, very rarely do we talk about, but some are looking okay. Signature Global is one from the real estate pack. Now, why is this interesting? Because Macrotech, which has been an erstwhile favorite, is in fact down today, but Signature Global is rising. I wanted to just spot a trend on the real estate space because it also has that interest rate play that we have been discussing so far. But other than that, Realty has already been a good performer. For the last couple of years, it's been a wealth creator for investors. And many of these newer names have created a lot of wealth. How should one look at such opportunities today?
The entire sector is not actually showing any specific momentum or say the end of the correction also, but the counters are still in the trend itself and offering good opportunities. So the counter now, Signature Global, honestly I was not really tracking this counter. I just opened the chart, and what I can see is a sideways consolidation, and the counter has really bounced sharply from 1050. So if someone is already holding it, stop can be 1240. If someone wants to initiate fresh entry, stop can be 1240, and the targets can be 1500 kind of levels. But I'm very comfortable with the names of Oberoi Realty, the counters which are showing good consolidation after a significant decline. This counter was trading at around 2350, right? And in the correction we saw it coming down till 1660, now consolidating sideways. I think with the stop of 1660, or say if there is a further decline, then with the stop of 1660, one can go long and just hold on to the trend, which can go up to again back to 2100. On the other hand, we have DLF, which is again sideways consolidating for the entire year of 2024, and now for 2 months of this year also. Good average level is around 740 to 730. Right now it's trading at 730. If counter reclaims that 750 mark, then with the stop of 730, one can go long, and the targets can be 825 to 830. They are not actually showing good momentum, but they are sideways consolidating counter, and that's why offering that comfort for the positional and the mid-term trader like me. So these are the two names in the real estate pack.
What about IT and pharma? Now, these are the two export-oriented sectors. One, we discussed the rupee impact, and the other one, of course, is how policies change globally. Those are the two key factors, how these two particular sectors could get impacted. What is your own approach to these two sectors? Are you looking at them, or do you think it's time to probably look at some other safe havens rather than this? Because these probably stand to be the first point of knee-jerk reaction if anything goes wrong globally.
So, in the pharma sector, we always have to be very, very stock specific, because how the companies have exposure and which particular drug they are onto, that makes a lot of difference on stock picking. But as far as IT is concerned, the counters are into sideways consolidation. I'm just looking at TCS among the entire IT pack. The only reason being, counter has not really performed so far. It's available right onto the support of 4000 levels itself. So with the stop of 3975, Our personal position is also open in this because that's where the trend line support is coming in. So with that stop, one is we are long on it, and if the momentum picks up, now that's an assumption. If the momentum picks up above 4125, the counter can show us the levels of 4300 to 4350. Otherwise, Infi and the TechM and these counters are consolidating. They are sideways and doing side. They are just into sideways consolidation. So if someone is an option trader, we can just look at the range, create short strangle, and on correction they can buy futures and hold on to the position. I think this can be a good short-term trading strategy on the entire IT pack.
Okay, fair point. Let's look at some of the other pockets. Okay, let's look at 52-week highs. Are there any names without, despite the market being so low? Yes, Kotak Mahindra Bank that we've discussed today already, M&M and also Reddington. These are the ones that are at 52-week high. Which are the stocks which are at 52-week lows? You have Shipping Corporation of India. There's Delivery from the new age tech space. That's after the earnings that the company has seen a sharp decline. Whirlpool, Gujarat Gas, Star Health and Happiest Minds are the stocks which are actually at 52 weeks low. Let's look at the volume action. PNC Infra seems to be high on volume, up by 1.5% odd in trade today. You also have Engineers India and Varroc Engineering. So infra engineering names, some of them actually catching some traction and huge volume being seen. Anything within the names that I took that looks positive to you, Kunal?
Not really.
Okay.
Reddington is the counter which definitely we have also shortlisted. Only reason being, in the
Okay.
morning itself it made a new high. But I'm not just buying on today's breakout. I'm just waiting
Sure.
for one more follow up. If there is a tomorrow follow up with the stop of 235, one can go long, and the targets can be 275 to 280.
Okay. Then do also tell us, Kunal, what should be the strategy on the index level for the rest of the week? Again, there's going to be CPI inflation data, WPI, IIP data will be coming in, Q3 earnings again will be coming in. Of course, globally will be the action. So a lot of data points to again keep in mind when it comes to the strategy this week. How would you be really looking at some of the indications as to how should investors probably position themselves on the markets?
See, on the index front, as we discussed, I think Bank Nifty is likely to outperform from the present levels, but at the same
Okay.
time, Nifty is also showing good momentum and the trend is positive. So the support level, which I recommend to all our viewers, will be 23,250 to watch out on the spot Nifty front. Right now, it's trading at 385. We are looking at the support of 250. If Nifty stays above that level, then pick up any counter which is strong in the large cap. Now, in the beginning of the show, only we discussed about Bajaj Finserv. Right now, it's trading near the high and it's now turning in green. These are the counters which are likely to perform. So, I think Nifty, we look at 23,250 as a strong support. On Bank Nifty, the immediate support is 49,500 and 48,750. So, these are the two levels to watch out for. I think overall, trend is strong, trend is likely to continue, and Bank Nifty will likely to outperform. So the three counters which we discussed in Bank Nifty are something where the investors can watch out for as the midterm to long term opportunity also.
Fair point. Okay. Well, if I have to also ask you, Kunal, if within the mid and the small caps, can you spot any names for our viewers that one could probably still look at? You did take some names within the large caps, but what about the mid and small caps as well? Are you finding anything which is worth looking at?
The counter which I have shortlisted and I literally like a lot, though it is looking expensive on the valuation front, but that's Dam
Okay.
Capital. Now, this counter got listed near to 450 mark, came down to 280, it bounced from 280 to 320 and back to 280 now. I personally feel that the too much on the downside on this counter is down. If the counter gets into consolidation and enters into an uptick, now uptick the level is 295. Watch out for 295 as a breakout. I think this can be a positional buy from the present level with the targets of 350 to
What is the
375. That's
counter that
first
you
one.
took the name of, Kunal? Dam
Dam
Capital.
Capital Advisors. Dam
Dam
Capital
Capital
Advisors.
from the capital markets and advisory space. Okay, so you're looking at a near term target of upwards of 300, you're saying.
Correct. 295 is the breakout. 335 to 340 is the target.
Okay, fair point. Well, thank you so much, Kunal, for being with us on the show, helping us navigate through this tough market at this point in time. But the good takeaway that I'm going to be sharing with all our viewers after our discussion is that things may just start to look better from here on. We already have a lot of risk factors taken care of, and the markets could just be looking at forming a bottom, and then we could be looking at things moving upside. Nifty Bank could be leading a recovery, is what Kunal really looks at this point in time. Let's start wrapping up the trade. We're just 1 minute away from the day's close. 185 points lower on the Nifty, 23,377. The Nifty Bank down by 0.4%, slightly better off than the benchmark index, 49,957 being seen here, 200 points of a cut nearly. Sectorally, all the sectors did slip into the red, with large cuts being seen on Realty as well as the metals pack. Realty 3% down, metals 2.8% down as well. What we are also looking at is consumer durables, broader markets, all of them saw over 2% cuts coming in. Pharma, IT, again looking weak. That's despite the rupee hitting an all-time low right there, which otherwise supports these export-oriented sectors. But no safe haven buying was also seen on these pockets. Slightly better off with lower cuts were the FMCG stocks today, were the banking stocks today. And the IT stocks as well. So keep an eye out on all these pockets as we move along going forward from here. Broader markets again, the names that stood out were stocks like, Zenith Exports. You also had names like, which we also discussed, Signature Global, Reddington. These were the kind of stocks that stood out. But on the weaker side, you had a whole host of stocks like Tilak Nagar Industries declining in trade. You had Borosil, you had Zaggle Prepaid Ocean Services post earnings, sharp declines of over 10%. Unicommerce Solutions as well, 10% lower in trade. Ceylan Exploration. You also had stocks like Precision Camshafts, again auto ancillaries also losing ground. So that was the entire space that actually felt the dent in again trading session today. Of course, the markets will be looking at how overnight the cues come in from the US. Are there any talks on the positive side when it comes to Trump tariffs, or are there going to be any concerns again emerging for the global trade? That's going to be a key trigger point. For now, the rupee is at record low. It's slightly improved from the day's low point, and that's what even Kunal mentioned, that's what his indication for looking at things improving for the positive is. Gold prices have hit again a record high level, and that's the space that you need to really watch out for. Most of the analysts are actually getting bullish on gold and silver, looking at the world uncertainties and geopolitical uncertainties emerging. That could be probably spelling trouble for the risk on sectors. Stay tuned with us on Business Today Television, as even after the stock markets coverage ends, we are going to be getting you an understanding of what you can as a strategy hope to achieve and probably kind of stem your losses, increase the chances of your profitability, hedge your portfolios better. All of those conversations will also come in. I'll be back at 4 p.m. for a very special conversation that you should know in case you really want to understand the markets from a bird's eye view and see whether you are making any mistakes in the current market environment. So stay tuned with that. I'll be back at 4 p.m.
Karnataka is India's ultimate startup destination with over 14,000 registered startups and 45 unicorns. Bangalore, proudly known as the nation's startup capital, ranks third globally in the number of startups, cementing its place as a powerhouse of innovation. The city also has 144 incubators and accelerators and 1,500 plus VC funds. Karnataka's success is further driven by strong industry, government collaboration, a bold entrepreneurial spirit, and cutting-edge R&D hubs of global giants. As we approach our global investors meet, I eagerly look forward to recognizing and rewarding the startups shortlisted through Venturize, our international startup challenge. Venturize is set to boost startup ecosystem and drive innovation and entrepreneurship across the country. Join us as we accelerate growth and shape the future through Invest Karnataka 25.
giant slayer in the New Delhi polls, the BJP leader who defeated Arvind Kejriwal. Parvesh Verma seen distributing sweets on Delhi streets.